Is inflation a quiet form of theft? Does it feel like your dollar is purchasing less and less by the day? Is the economic data even making sense? And is the steady erosion of your purchasing power putting your retirement at risk? More importantly, what can we do about it? How can investments in scarce assets like gold and silver or decentralized assets like Bitcoin be used to counterbalance this constant erosion of our savings and purchasing power? If you think you may be falling behind, see the link in the video description to access the free Inflation Retirement Calculator to make sure that you are on track. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from economist and investor Keith Weiner, economist, White House advisor, and author Jim Rickards, author and economist at George Mason University, Lawrence H. White, and economist, financial broker, and author Peter Schiff.
I mean, one of the arguments that people can have against the gold standard is that look at how expensive it is to get gold out of the ground. And then if we're just going to stick it in another hole in the ground and no one's going to see it or use it, it's an expensive way to run the monetary system. Now, I think those costs are small compared to the benefits of having sound money versus all the losses imposed by the fiat system.
Monetary policy, the Fed and other central banks, actually the Fed's not the worst of central banks, but the track record of monetary policy is not very good. It's pretty poor. If you compare fiat monies since 1971, that's when the Bretton Woods system ended and we got pure fiat money, we've had higher inflation than we had under the classical gold standard. We've had a less predictable price level. And you see that in the shrinkage of the market for 30 and 50-year bonds. They become very rare because nobody knows what a dollar is going to be worth 30 years from now. Whereas under the gold standard, you got a pretty good idea what the dollar is going to be worth 30 years from now.
Something doesn't teleport from zero to ta-da, money without skipping. Why would anybody have wanted to hoard it in the first place before it was money? It had some other value. And we're making a value proposition and saying, look, you should consider owning gold for reasons X, Y, and Z. The reason X is, we're going to have a Mad Max end of the world. It's not a real attractive value proposition. I'll just leave that at that. Number two, nobody, and I say this often in my writing, be careful what you wish for. If gold's $20,000, let alone $100,000 an ounce, you may have a lot of nominal dollars, and even if those nominal dollars have the purchasing power you expect, just probably not likely, you're not going to want to be in that world because, the peasants are going to be out there with the torches and the pitchforks. You know that 99 point, I don't know what it is, 7 would my guess, percentage of Americans don't have any gold. So these people that suddenly, had been, prosperous are suddenly impoverished and very, very angry. You wouldn't really want to be in that mob with your Ferrari that you bought with the winnings on your gold because they'll just smash it and smash you and, that's it. So you're better off with gold than without. We should all be thinking about how do we avert this catastrophe rather than how to plan to, I'll put scare quotes around profit from this coming catastrophe.
Gold is a chameleon. We all know if you put a chameleon on a green leaf, it looks green. You put it on a brown tree trunk, it looks brown. Gold sometimes trades like a commodity, sometimes trades like an investment. It competes with stocks and bonds for investor portfolios, and sometimes it acts like money. Now, I think of it as money. I think that's the right way to think about it. But look, it trades on commodity exchanges, and I'm impressed that gold has done as well as it has in a positive real rate environment. The Fed will not rest until they get the inflation they want. So I think we have to take that as a given. Governments cannot tolerate deflation. It is their worst nightmare. Destroys tax collections, increases real debt to GDP because the real value of debt goes up. Well, gold as money is the gold versus the fiat trade, but just to turn to the insurance aspect of it for a second, I recommend about 10% of your investable assets. Don't count your home equity in your business. That's your shelter and your livelihood. Put that to one side. Everything else is your investable assets. For an institution, it's just whatever your portfolio is. I recommend 10%. By the way, the average institutional portfolio is about 1.5% gold, and that's not evenly distributed. Most portfolios have 0, and then there's like Kyle Bass and University of Texas. I think he's above average, but it's about 1.5%. If institutions just went from 1.5% to 3 or 4%, forget 10%. I mean, there's not enough gold in the world or near these prices to fill that demand. So it wouldn't take much of an interest by institutions in gold to send the price skyrocketing. That's just normal supply and demand. That's an insurance component. So do you have fire insurance on your house? Of course you do. Do you want your house to burn down? Of course not, heaven forbid. But if it does burn down, you're really glad you got the insurance. And when you write a check to the insurance company to pay for your fire insurance, do you think you're wasting your money? No. So that's one thing that gold can do in a portfolio.
the 5,000-year history, gold is the one asset that has outlasted numerous business cycles, economic downturns, booms and busts, stock market bubbles, and the rise and fall of every currency. And unlike depreciating, faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you enjoyed this video content, be sure to like and subscribe so you don't miss our next video. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.